Good afternoon, everyone. My name is AJ Thomas, and I'm a fourth year at the college studying economics and history. It's my pleasure to introduce the IOP Speakers Seminar Series event, What Happened When Redditors Took on Wall Street. Moderating today's conversation is the renowned tech journalist, Miss Kara Swisher. You might know her from the iconic red chairs of the All Things Digital conference, interviewing the likes of Steve Jobs and Bill Gates. Currently, Ms. Swisher is the editor-at-large of New York Media and hosts the Pivot and Sway podcasts. A large part of her work has been focused on holding those with influence in tech and politics accountable. If you haven't already, I recommend you check out her conversation on today's topic, notably with Reddit CEO, Steve Huffman. Joining Ms. Swisher for this event is Mr. Chamath Palihapitiya. He is the founder and CEO of Social Capital, a technology holding company whose mission is to advance humanity by solving the world's hardest problems. Mr. Palihapitiya adds a unique perspective to today's conversation, particularly because of his experience, as he once put it, crossing the chasm between labor and capital. He grew up as an immigrant in Canada and ultimately worked his way into Silicon Valley's upper echelons. He was Facebook's early VP of user growth, and he then compounded his early successes as an investor in companies such as Slack and SurveyMonkey. More recently, Mr. Palihapitiya has played a pivotal role in the revival of special purpose acquisition companies, or SPACs, which he believes expands retail investor access to tech growth returns. Finally, he's also a co-host and bestie on the All In podcast, along with UChicago law alumnus, Mr. David Sachs. Please join me in welcoming Ms. Kara Swisher and Mr. Chamath Palihapitiya.
Hey, oops, hold on. There I am. There I am. Oh, there I am.
Christ, Kara.
Hey, you couldn't turn it off before. All right, hello, Mr. Palihapitiya. I'm never calling you Mr. I'll call your dad that, perhaps. Anyway, Chamath, thank you so much for doing this. We were supposed to do it earlier, but actually now is a perfect time. And there's tons of questions from students, so I want to get to them for much of the time. But first, let's us talk about some things, and then there'll be more questions, and students put your questions in the Q&A part, and we'll be calling on you, and then you can ask Chamath yourself. So let's start off. Actually, today, right now, the votes are coming in Alabama for Amazon, and over the weekend, you're someone who spends a lot of time on Twitter, sort of throwing down a lot. Amazon went whole hog with their Amazon News. Whoever that is, I think it's Jeff Bezos, I believe that's who it's turned out to be, has really gone whole hog against Senator Warren and Senator Sanders, and sort of very tough, and including their executives like Dave Clark. So right now, it's another great moment in sort of disruption and what's happening. Talk a little bit about that, and then I want to get into what happened in Wall Street, because this is sort of part of, to me, the same kind of sort of in-your-face attitude.
Well, I think what we're seeing is the beginning of this sort of third phase. In phase one, I think technology companies had a license to be naive, and in many cases they were. So, they just kind of built things, and they were still in the periphery of the economy. And that probably stopped somewhere around 2005 or 6, when it was really clear that Google was sort of the all-encompassing destroyer of media as we knew it. Mm-hmm. And then from 2005 to 2020, it was about telling tech that they needed to act like good citizens, and them throwing their hands in the air and saying, "What? Who? Us? We weren't even invited to the party." Mm-hmm. And I think this last little few weeks is the beginning of phase 3, which is they've realized the game theory now is to put the politicians on their heels and say, "Okay, now legislate us." Mm-hmm. And what I think tech companies realize is that was probably the right posture from the beginning, because these politicians have no ability to legislate. Mm-hmm. To the extent that they do, it'll be so watered down and it'll be so convoluted that it'll just reinforce their monopoly. And so I think you're seeing now what is basically a shift where Dave Clark, Bezos, Zuck, Jack, Sundar will get very aggressive and essentially be fighting back, counterpunching, particularly the progressive left, and almost baiting them to try to draft laws, knowing that those laws will never pass, and whatever does will just make them become more of monopolies than they already are.
And why is this a particularly good strategy? Because, I heard from dozens of PR people, including some very fast forward tech companies that were sort of shocked by what Amazon was doing this week, especially with, the attention seems to me should be on for Amazon to make the argument to its union members, hey, we are giving you $15 an hour, we have healthcare benefits, we have your interest rate, the union doesn't. Like, make just the argument itself rather than attack politicians. What's the strategic, what did you think of when this was happening? Just, this is what's happening.
I think it's really smart. And I think what they're doing is they're realizing that they're going to lose the battle no matter what. So there's going to be a strain of people. And by the way, the pandemic made it possible to go in this direction. There was a strain of people that they were held hostage by when they were companies being built in 2 or 3 cities of America that were basically progressive left. And now all of a sudden they realize, wait a minute, we can be economically productive and technically productive with a completely distributed workforce. We can have employees sitting in all kinds of states and in all kinds of cities and in all kinds of suburbs and urban places. Now we're no longer held hostage to the 10% of very loud belly aching from folks that basically want this quote unquote social conscience inside of these companies. And so as a result, they're like, well, what is the most important thing we can do for the existing employees and for shareholders? It's to win for the next 20 or 30 years. The only way you do that is if you can basically get now not attacked with law. And so the right thing to do is put these folks on their heels and make their most vocal critics act, knowing that what they can do is very limited. So I don't necessarily like what they're doing, but I think that it's strategically brilliant. Then, by the way, just when you talk about the employee thing, I just want to note that, you know, Amazon's employees vote with their feet every day. And I think that they've realized that they do have $15 an hour work plus good healthcare benefits, because you know, these guys are hiring. I mean, they're going to be the largest employer in the United States and probably the world within the next probably 4 or 5 years.
Right. So give me the counter case that they did pick this fight. One of them was about peeing in bottles, and the story did become about peeing in bottles. And of course, immediately there was tons of reports of Amazon, workers being disgruntled about how much they're pushed in these systems with the AI determining their productivity, peeing in bottles, going to the bathroom in bags, every defecating in bags.
Honestly,
you think it's just noise? You think that's just
horseshit? And I think it speaks to one of the bigger problems we have in media right now, which is that it's very hard to tell the truth because oftentimes the truth is in the middle and somewhat boring. So when you can have something that's, really exciting and salacious as people peeing.
Amazon brought up peeing, but go ahead. Go ahead.
Just like, it's not the case that this is a pervasive problem. And I don't think they brought it up saying, my gosh, we have a systemic issue where we have such poor worker rights that this is happening. That I think it was more like, this isn't an issue. Why are people making such a big deal out of it?
Okay.
Reason why is because it's click worthy. That's much more click worthy than, person, leaves social assistance and gets $15 an hour job at Amazon. That's boring. That's not click worthy in a world where, unfortunately, that's how we have to fight for a business model.
So how do you try? I want to get onto other aspects and what's happening with Wall Street, because it's the same. It's kind of a similar feeling, although in that case, it's actual little people versus the richest people in the world and the most powerful people. Why trust these people to do the right thing? In terms of when they don't always do the right thing all the time, and it's a small group of people. So is that not dangerous from your perspective?
It is, and I think that you shouldn't trust them. I don't think that, I think it, like, if you think of the last 20 years, Kara, what's really happened is Google has created, and Facebook, incredible information symmetry, meaning the poorest person to the richest person, the most successful to the least unsuccessful, the oldest to the young, can now all know the same things, plus or minus very small deltas. That wasn't the case 40 or 50 years ago. There was a deep asymmetry before. So as you level that and created more symmetry, the reality is that now we can all know the same things. And so the idea that then you would then imbue more trust, knowing more, is kind of counterintuitive to me. If anything, one should realize that their incentives are clearer to understand than ever before. And so instead, you should just sort of agree that live and let live is probably the only scalable strategy when there's information symmetry. When there's asymmetric information, you have to trust, right? Meaning a policeman shows up at the door and says, there's something happening. We need you to do X, Y, and Z. There's an asymmetry of information. There's trust. The president of the United States gets on television and says, we just bombed Syria for X, Y, and Z reasons. There's an asymmetry of information. Hence, you must trust. Fauci gets on television and says X, Y, and Z needs to happen. There's an asymmetry of information you don't know, you have to trust. That's not what we're talking about anymore, right? We know exactly down to the share that Bezos owns. We know exactly down to the location in terms of where goods are, being built and made and shipped, and demand exists, and everybody knows everything. And so Amazon has an economic incentive. Facebook has an economic incentive. Moral decisions that you put into the hands of companies are no longer reliable. And so if anything, we need to re-underwrite why we would have put that kind of trust in businesses now that we know more transparently what they're there for. They're only there to make money. They will only react in so much as it allows them to continue to make money in an unfettered way. And I don't think that that's wrong. There's nothing wrong with that. That is what companies, for the most part, should do. And that any leader at a company that starts to pretend that they're going to replace legislators is doing it from a position of marketing and hoping that you are one of the people that will, despite the symmetry of information, believe a lie.
Right, but there are certain versions of capitalism, including Adam Smith's, that shows a lot of public interest. That even Adams was sort of been read recently. Today there was a big thing back and forth. He didn't just say the invisible hand. He also talked about protection of workers, protection of institutions, good of society. There was quite a few chapters on that.
I think if you're talking about Adam Smith, Wealth of Nations, 1700s, sure, but I think
he was against mercantilism. But anyway, go ahead.
Yeah, but I think that things have changed. Yeah. So for example, if you have a company that wants to greenify their business, right, and eliminate emissions, and in doing so, they create some incredible technology around electrolysis or green hydrogen. I'm just using an example. I think it's important to note that, of course, there's altruistic value to what they've done, but fundamentally underpinning that decision was a very strict capital allocation decision by a CEO. And all of that was about the discounting of cash flows, of future cash flows, and a decision that had made sense. Otherwise, what you would see is, for example, Apple decide to build a Bay Bridge and not the government. And the first Bay Bridge costs a few $1 billion in a few years, and the second Bay Bridge costs 17 years and 25 or 30 billion. Now, could a for-profit company do that kind of stuff better? Could a for-profit company rebuild all of America's infrastructure cheaper, faster, better? Of course. Why would they never do it? Well, it's because there's no economic incentive to do it. So all I'm saying is it's not that companies, by doing the thing that's profit maximizing in the near or long term, it's not that society doesn't benefit. They do. But it's definitely a byproduct. And I think that that's okay. That's how capitalism works. And really what we're recalibrating right now, and people may not like what I'm saying, but I think it's pretty much the truth. I think what we're recalibrating right now is governments interplay with these organizations. And I think what we are learning, particularly in Biden's first 90 days, is government is great at setting incentives. They're not great at doing things. So when you set the incentives, corporations will act out of their own self-interest, supported by shareholders and stakeholders. And it's that relationship, when if it's done effectively, can be very productive and fix a lot of problems.
All right, so let's talk a little bit about, I just interviewed Mariana Mazzucato, who talks about this kind of thing, where there is the government, the interplay between the two of them. Let's talk about what happened with Wall Street, because I think what you were talking about, asymmetric information and everybody having the same information. You went sort of right out there talking about why this was critically important. Looking back right now with Wall Street Bets and what happened on Reddit, what is your assessment now? With several weeks later, things have calmed down a little bit. And where's it going?
It's incredible we're having this conversation today, because this weekend there was an incredible amount of noise because we had a very big hedge fund blow itself up over the last 3 or 4 days. And so there's been a lot of chaos in the financial markets unwinding, and slowly we're getting a lot of information about what happened. And in many ways, these are really elegant bookends. So in early January, the first thing that we just talked about, this symmetry of information, is really what allowed GameStop to play out. The fact that everybody had access to the same information, and all of a sudden it turned out that it wasn't a highly sophisticated hedge fund, but it turned out to be a bunch of retail investors who saw that these stocks were so massively shorted. Meaning 130% short, 125% short, and they effectively ran a massive short squeeze and gamma squeeze on these guys. That never would have been possible before because the information wasn't available as easily. So we proved the symmetry of information creates equality. That was really interesting. But then we also proved that governments and systems can intervene
Yes.
and still muck it up, which left the open question, well, how would we prevent that from happening again? And the
mucking part, not the
mucking part.
not the squeeze part.
No, the mucking part. And the way that you prevent that is by creating the right incentives. So one incentive would be around the risk limits that hedge funds are allowed to take. Another incentive would be that we have to settle trades in real time using a blockchain or something else so that you can't have these weird dynamics occur.
Of loaning and stuff.
I mean, Kara, you'd be shocked that the financial infrastructure of the world is built on the most incredibly brittle, fragile systems that we all have to rely on. And then what happened this weekend was a perfect.
No, I'm watching the Suez Canal right now. So no, I get that completely.
Right. And so
one boat could ruin the whole global economy, but go ahead.
It's incredible. And so what happened this weekend was a failure of extremely simple systems and incentives. So today, I think we proved, coming out of this huge unwind, this big fund goes out of business, there's $50 billion of risk netted against several $100 billion of shorts in the S&P. An over-the-counter instrument, an equity swap, which is not a very complicated instrument, but the impact of it, Viacom down 30%, Discovery down 30 or 40%, Farfetch down 15, 20%, Shopify down 10 or 15%. It shows that the incentives aren't really still set up correct. This person was able to take an enormous amount of risk. The banks didn't have a coordinated way of seeing across each other's risk books that this same person theoretically could have been violating the agreements that they had with one. There's a simple agreement that we all have, which is, for example, if I go long or short a company, I'm not allowed to do that with leverage over and above 9.9%. Then there's huge filing restrictions. I live by that rule. So if I, own 9.9% of businesses, which I do, I can't go to the next bank and then borrow and buy more and go to the next bank and borrow and buy more. Now, if I did, I wouldn't really be caught because they have no way of coordinating. It's just a representation that I make verbally. But yet again, we see how brittle these systems are, where an individual is able to go on, put on an enormous amount of risk, take 5 billion, spin it up to 50 billion, buy 10% positions in these really important companies, then get stopped out and have all these banks run to the hills trying to figure out how to unwind this stuff. And we all get caught in the undertow. So we're learning through this Wall Street example, again, the value of symmetry allows everybody to play on a level playing field, but now we need to clean up the incentives. And this is where governments can be very effective.
Meaning where people can borrow and where you could see the transactions, a more transparent transaction system.
Coming out of this great financial crisis, we had a meaningful step forward in financial regulations, right? And so, we had strict limits on the banks on how they could make money. Net that was beneficial for the system, but all the banks did was just offload the risk onto hedge funds who remain unregulated and allow them to operate. Now, irrespective of whether hedge funds should or should not be regulated, I do think it's fair to say that everyone should operate under the same rules. And leverage is the one thing in this specific game that can undo the whole system.
Right. So you have to trust all the players in the system not to cheat. And
again, now go back to why in a world of symmetric information do we need to build in trust? No trust, zero trust. I don't want trust. I want a blockchain or I want a document where every bank, if Chamath goes and tries to borrow, every bank will very quickly, wait a minute, Chamath, you have tried to now raise, $50 billion to buy 10-cent music in 9 different places. No, you can't do that. So there's no trust that's necessary.
Right.
That's better in a world of symmetric information.
So these are smart contracts. Smart contract, essentially smart.
Computers don't lie unless you make them try to lie. Humans have a tendency to be really shady in the end.
So in the aftermath of what happened in Wall Street Bets, what do you think people got wrong or right about what was happening? Some people criticize you and others of sort of cheering these people on, making them go up, and then they got caught when these systems mucked up, when they couldn't sell, they couldn't take, they couldn't keep buying. And it was sort of the little guys that got squeezed in that regard.
I think it's still not clear to me who really made all the money and didn't make all the money. I do think we know that there are some institutional hedge funds that now are no longer in business anymore because of it. But in the aftermath of it, I think what I learned is that the rules are still not fair. Even though if the information is fair, the rules are not fair. And so my big takeaway after GameStop was you need to go and rewrite some of these rules.
Mhm.
particularly, again, risk, leverage,
Leverage.
and settlement of trades. Those three things, if you did those three things, you'd make it so much fairer for everybody. And now, after this hedge fund blow up this weekend, again, it goes risk, leverage, and settlement of trades. There's just those three things would create tremendous equality.
And what do you imagine, speaking of regulators, let regulators regulate, do something. What would you want to see from the government in this case?
Well, this is where, like, Elizabeth Warren and Bernie Sanders, what they betray, despite all their BS, is that they just care about the press. They care about the attention they get versus actually doing what is valuable. So if they were, and Elizabeth Warren should be at the front of this train. She is the most sophisticated to understand these markets. She has not developed one scintilla of legislation to fix this. And instead, she wants to get in a verbal pissing match with Bezos and Jeff Clark on Twitter. It's also dumb.
Yeah. I think they're dumber than she is because I think she does that. So I find them, they didn't make one remark about when Trump was doing it and suddenly they attack her and Sanders. It's just interesting. If you notice, they said nothing when Trump was doing 10 times the attacks on them, probably. And had the same amount of no ability to do anything about his threats.
Yeah, I think the game theory was always that Trump would be ineffective beyond tax, and he was. And I think game theory here is that they're trying to bait her and Bernie into trying to draft some legislation that will fail. It'll fail on the floor of the Senate. It'll never get anywhere.
Right.
And so that neuters them, and it neuters a large part of the progressive left. And so it puts them in a this is why I'm saying the game theory here on the chessboard now is really important because, Zuck said the same thing in his congressional testimony. Tell us what to do and we'll do it. Jack said the same thing. Tell us what to do and we'll do it. Now Bezos and Dave Clark are like, just write the laws and stop belly aching and we'll live by it. If you want us to have a higher minimum wage, we will. Knowing that when push comes to shove, these two go into their room to try to figure out how to draft these laws, and they have zero credibility in the Senate to pass that legislation. So
what has to pass? Because that's just game theory. You're all playing games with people's lives. Like what actually does work instead of these pissing matches between...
Well, I said something this weekend. I talked about it on the All In podcast. I tweeted it out. People got so upset, but I think what actually works is spending. If you think about what we could do as a society to fix some of the more important problems that we have, it would be at a very simple level to even the starting line for people. I think the most elegant way to even the starting line is to give people more money and to get some of these externalities out of the way. So what's an externality? Climate change. So like if you live in an area that could be impacted by drought or famine or hurricanes or whatever, that's an externality you want to avoid. If you get sick, you want to have access to reasonable healthcare. Otherwise, it's an externality that you can't afford to overcome. Education, right? So those are systems that you can fix. How can you do it? By spending. And the government is doing a good job. This is where I think Biden has done a much better job than the extreme left or the extreme right or Trump, which is he's realized that the way he gets reelected is by spending. The way that he actually closes the wealth gap is by spending. And the way that he fixes inequality and climate change is by spending. Now, we haven't seen the details of that second big chunk of law, particularly around sustainability and infrastructure, to know how he'll do it. But I think all roads lead to that same conclusion. You put more money in the system that wasn't expected. It hits people in the pocketbook. People's natural propensity is to act by consuming more. That drives up prices, that actually moves the balance of payments towards systems where people need to be paid more to do the work. That helps middle income people way more than wealthy people. And wealthy people see their value shrink because the assets they own are not tied to commodities and velocity of goods. It's tied to financialization and things that don't do well in a rising rate and in an inflationary environment. And that's why the wealth gap closes. So what governments can do is spend.
So you're happy with Biden so far? I
think he's fabulous. I mean, he is doing everything he needed to do. He basically, put a gun to the head of the pandemic. He made every single state, both on the left and the right, look frankly just stupid and dawdling and navel gazing, including California and Gavin Newsom, which we can talk about in a second. And then he realized that there are elements of the LBJ plan which were incredibly effective, and frankly, that Nixon borrowed to get elected, and then Carter shut down, and that is just to spend and to put money in the system. And the big difference between the 1960s and 70s and today is I think that there's such a huge percentage of GDP that's technology, and that's a governor on hyperinflation. So in the 70s you had like the gas lines and 16% rates and all this stuff. I don't think you'll have that now, but you could have steady 4 or 6% inflation. That crushes rich people. It does massive good to the middle class. And I think there could be a lot of value there. And I think Biden has the script.
How does he hold on then to the control to do that, to do so?
This is the only way he actually, so going into 2022, the only time we've ever seen, so if you go back in history again, when have we seen a Democratic Senate, President, and House? LBJ. And how do you keep it? You spend through it. And so, and he has the ability now to get this infrastructure bill passed in the Senate and in the House. I think he will. He also just said, Jen Psaki just said on Sunday, they're going to have another spending bill on top of the 1.9 stimulus bill. So, I mean, Kara, when we're all said and done, this could be $7, $8, $9 trillion. I mean, you're talking about 30, almost 40% of nominal GDP that he's printing.
And how does he combat the political? You then ignore the political lack of partisanship, or maybe there is partisanship.
Oh, there's enormous partisanship, but I think I don't think. See, again, I think that in this weird way, Biden and big tech are actually deeply aligned. Why is that? It forces the progressive left to act, put up or shut up, basically. But they know that it's a lost cause, and so they're going to lose political power. And for Biden to consolidate his path into 2022 and then 2024, because he said he's going to run for a second term, he actually has these companies doing his bidding for them. It's quite incredible. So they'll do more to, essentially neuter and embarrass, Warren and Sanders. They're not going to be able to do much. Meanwhile, he is spending, and he's going to pull people to a more centrist, reasonable point of view, which I think is when governments are the most effective.
Probably. When he at the same time, he's backed the union efforts in Alabama. He's appointed Tim Wu. Lena Khan is probably headed to the FTC. What do you look at those moves as they're moving in? And then I'd love to talk about SPAC.
I think they're important window dressing, but they're not substantively important.
So scary enough meaning.
Like, look, he doesn't gain anything by not supporting it, and he doesn't lose anything by supporting it. And so you can put it into that matrix and say, yeah, I want to be long back. Now, let me be clear. Union rights are really important. And I actually think in a world of inflation and rising rates, you could have a renaissance of organized labor. The thing is that you have to destroy and dismantle the boomers' version of unions, which was essentially forced taxation. And that forced taxation manifested in all kinds of nefarious stuff. And we saw it through the 70s, 80s, and 90s, waste, graft, corruption, pay to play. There's all kinds of really pernicious things that V 1.0 of union organization did. Now, in a world of more transparency, the second iteration of unions have tremendous power, and it looks more like a European model where you have participation at the board level, you have a different form of negotiating power, and that's where I think that unions are very important and a key input.
So new versions of unions.
Yeah, but not like these 70 and 80-year-old guys at the SEIU who are like, pay your tax. That's not going to work.
All right. So one of the things you did talk about is this version 2.0 of everything. Last time we talked, we had a really interesting discussion about getting rid of companies that were financially engineered, and betting on those growth companies, not necessarily tech companies, but everything manufacturing being reinvented. How do you look at it now coming out of the pandemic?
We are going to have, such an excellent question. Here's how I've thought about it. We are going to have, I think, 4 or 5 balkanized blocks. So you think about the Cold War as, basically America versus Russia, and then you had to pick a side. What you are going to have here is America, probably plus Mexico and Canada in one block. You're going to have Europe in another block, not including Britain for obvious reasons. I'll get to Britain in a second. You'll have China as a block unto itself. You'll have Africa as a block, you'll have India as a block, and then you'll have a bunch of floaters. And so, the UK kind of matters in some respects. Central and South America kind of matter. Australia matters actually a lot in one very important thing, which is outside of China, the access to precious mines and minerals and metals that we need to just power the world. But basically, you're going to have these balkanized blocks. And the first thing that every block is going to say is, we need to have our own supply chain. These are national security or, group territorial security imperatives. It already started in Europe around batteries and sustainability and climate, the preponderance in offshore wind, the building of battery capability, the subsidies they give on power. So that block is formed. United States now, you see the rhetoric from the Biden government. It's pretty incredible. These things are national security things around chips, around climate, around nickel, cobalt, lithium. So we're entering an arms race. China is going to do its own thing, and they're basically going to get their own country to net zero as soon as possible because they have different issues. They have a reproductive issue, which is enormous. They have an issue on sort of just like the ability to have meaningful labor. They have a demographic cliff that's scary, scary, scary. And then India now, I don't know if you saw the news, Kara, is thinking about having a climate neutral pledge and moving themselves forward in a timeline ahead of China.
Yeah.
So you're going to have these blocks and everybody is going to build a version of everything. So, to use a simple example, if you had like McDonald's in North America, you're going to have McDonald's in Europe, you're going to have, blah, 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 McDonald's in China, and, and so you're just going to have versions of everything. Enormous inefficiency. But going back to this conversation before, it'll help reinforce the working class and middle class. And it'll be more resilient. And it'll be done under the guise of national security and resiliency, but that will give the governments the air cover they need to spend.
All right. So you're talking about anti-globalization in a weird way.
Oh, it's the end of we had a very narrow and fragile definition of globalism, which was really just in time, right? JIT. And that idea of just in time fell away in the pandemic because we couldn't afford the risk that comes with it.
Right.
Your example, which is it's incredibly ludicrous that, we have 5 days of global supply chain delay because an electric rotor failed in a barge and all of a sudden constipated the global shipping lines.
Yeah.
And you had, Egyptians digging out.
Yeah.
But what are we talking about in 2021? This is nuts.
Yeah, indeed. All right. Well, let's get then to, I want to get into SPACs in a minute, but we have questions soon, but cryptocurrency, obviously NFTs, all this activity in Bitcoin. You were an early Bitcoin proponent. Where do you look at the market right now? And then I'm going to get to questions from the audience.
When I started looking at Bitcoin in 2010 or 11, I wrote an article in Bloomberg, I think in 2011 or 12. And at the time, what I said is, on balance, I think that this is an enormous hedge.
Yes, you did.
And I thought that this was schmuck insurance.
Mm-hmm.
And
that's what you called it.
If I had to use today's language, what I would say is, in a world of increasingly symmetric information, you should not trust anything, including the traditional financial system, to behave rationally. And so this thing is antitrust. You don't have to trust anything. And I think that that's an incredible uncorrelated hedge. So if the monetary system and fiscal policy is based on trust, Bitcoin is based on no trust, because you can read a blockchain and get to ground truth. And so what I would say now is that, I would probably view it as a system that has enormous value for that reason. In a world where trustworthiness will become less and less reliable, and that incentives will ebb and flow very quickly, one should have exposure to instruments that are not based on trust, but are based on truth.
Right. Right. So trust works when it works. That's why a lot of Bitcoin got started in countries where the monetary
I
policy.
actually think that trust is something now that doesn't exist it shouldn't exist in capitalism. It
Mhm,
should exist in emotional relationships between people and friends and families.
mhm. So you're
There's
don't
no
trust,
room for trust.
just
It's
verify. So it's
inefficient.
don't trust, just verify. So what do you imagine? You looked at it as a speculative instrument. Now it's a what? Now looking at NFTs, can you give sort of your top level thoughts on it? I did a column saying stop worrying about it. Everyone went sort of just pivoted up, wrapped themselves around the axle about an artwork. I'm like, it's not about artwork. It's about smart contracts. It's about consumer gateway.
If I was encouraging people who are listening or watching who are interested in this, what I would encourage you to do is to, exactly as Kara just said, understand what an ERC20 contract is. And if you take a step back from that, understand what Ethereum is. And if you take a step back from that, what the difference is between Ethereum 2.0 and 1.0 are, and then understand the differences between it and Bitcoin. And in it, what you will get exposure to is, I think, the future of truth-based systems versus trust-based systems.
Contracts, smart contract. I don't know what else to put it. One of the things someone was asking me, I was like, this is the same questions asked me of the internet. I don't know why Google is worth so much more than any other website, but it is just a website. If you think I don't understand, it's to begin to understand it. But I think you believe, and I think I believe that a lot of things will be flowing over these systems, contracts.
Yeah, it's another great, why for a long time was Google worth as much as it was worth? In many ways, what PageRank was the closest form of objective truth that we had.
That's right. Right. But it's just a website. I keep saying it's just a website.
But
yeah.
it wrapped objective truth, or very close to objective truth, in a little search box.
So where are you right now in this investment, and where should government be? Speaking of governments, are going to be getting involved.
Yeah, I've been a very
large. The same thing with the regulations after GameStop. Where do you see government stepping in? And then we'll get to questions.
I think the governments have now no choice except to acknowledge it. And I think that they are. The reason is that governments should figure out what the incentives around cryptocurrency are, and said in a different way in government language, how can they tax it? Mm-hmm. Because there are trillions of dollars already being made. If you look at the market cap of crypto, and many tens of trillions of dollars will be made. So for example, even if you just look at stable coins, and if you don't know what stable coins are, it's basically where underneath the cryptocurrency is a $1 stable coin. There is actually one physical dollar held someplace, right? Mm-hmm. So it's tethered cryptocurrency. And you'd say, well, why is that valuable? Well, it turns out that then you can, as you just said, Kara, write contracts around the flow of US dollars in a much more efficient way than you could ever before. Mm-hmm. That market is in the hundreds of billions of dollars, and people think it could exceed the M2 money supply within 3 or 4 years. Mm-hmm. I mean, you may not know what the M2 money supply is. You may not care. My takeaway for you, though, is that it is an enormously important thing that's happening. Governments need to figure out how to tax it. Mm-hmm. They can't eliminate it, so that forces left the stable. Mm-hmm. And so people need to learn first. And right. NFTs are very much just a very, very small expression of smart contracts and one form of the truth. Now, look, your truth can be somebody else's fiction. And so, is a Beeple NFT worth, $69 million? To somebody it is.
I say, who cares? It doesn't matter. It doesn't matter. Yes, it is. Yes. And then it isn't, or it won't be. Who knows? That's the whole thing, is why decide. All right. We're going to get to a question next, but very quickly, where are you in SPACs right now? You got out of your SPACs? I wasn't really paying attention, Chamath. No. You're still in SPACs, correct?
Yeah.
You're knee deep in SPACs.
Yeah, we have 6 that we've launched and mm-hmm. 4 that we've executed. And of those 4, 3 are completely done and trading as independent companies. 1 is in the final stages of working with the SEC to approve our merger. That's SoFi, which will, be an independent company soon. Mm-hmm. And then we have 2 open SPACs that we are actively meeting with companies.
Right. So you still think it's a thing. There's 295 in 2001 alone, with 93 billion.
There's 300 that were raised in 2021. There are hundreds of billions of dollars, but literally only 4 trade above more than 10% of the NAV.
Mhm.
And 2 of the 4, so 50% of those 4 are mine.
Mhm. So
Um,
where does it go? It's a lot of bad SPACs out there.
so there was a lot of speculation in SPACs. I think that speculation will go away because people use it as a way of, this is going to be esoteric, but instead of buying bonds, people would buy SPACs because there was a financial arbitrage trade that made it valuable. That's collapsed because now people worry about inflation. So, interest rates have gone up. So this is a market like any other, which is that when you have people at the beginning, me, then they're labeled as crazy.
Mhm.
And then the market matures and a lot of people run in a lot of fast money thinking that this is easy. They are quickly finding out that it's very difficult to do these transactions and do them well, particularly repeatedly.
Mhm.
And then the market will settle. And when it settles, there'll be a handful of sort of tier 1 folks. I hope to be one of those.
And there'll just be public companies, and then they'll rise.
There'll be a lot of public companies, and the good thing is it does democratize access to retail investors.
It does.
On the balance is fair.
Yeah. Okay. First question. Hold on. Let me open my thing. To Adam Zabner. He's a 3rd-year neuroscience student in the college. Adam, appear, please.
Thank you so much for joining us and for taking my question. My question is, households are the most invested they've ever been into the stock market. And that investment has paid off over the last year with huge gains in the prices of stocks. Do you think that this is a bubble? And if there is a market correction, what do you think the consequences of all that household investment will be?
So look, Adam, markets have ebbed and flowed for years, but I would just encourage you to take a big step back and see the bigger picture in the following way. In any given year, GDP can flex up and flex down by a few percentage points one way or the other. It's very rare that you have huge changes of GDP in the modern era and since the Industrial Revolution. In the 1960s, you had, $1 trillion of GDP, which is now 23.5, and it grows by, anywhere between 0 and 2.5 or 3% a year. So over the long fullness of time, I think what we are going to teach people is the difference between speculating and investing. Investing really is about long-term capital allocation and taking a huge multi-year trend and being able to re-underwrite that. Speculating is when you have a bunch of volatility in any given month or year and react to it. So I think that not enough people have been taught the financial literacy to understand the difference. And I also think that it's amplified on Twitter and Reddit because I think that there's a machismo and a bravado around, these statements like diamond hands. And I see it even now, like the tenor of feedback that I used to get on Twitter was exclusively positive. And now there's so many haters.
Yeah.
And I think that these haters,
aren't you diamond hands?
well, I just think that these haters are riddled with 2 things. Number 1 is insecurity. And number 2 is lack of experience. Yeah. And that's fine because I've been that person as well. But the reality is that, I had to learn the hard way, margin calls, losing money, how to be an investor and how to temper my tendency to want to take risk. And I'm still learning. And so I do think that there will be volatility. I think that the more inflation there is, the more volatile we will be. And I hope that people will learn the financial literacy skills to learn how to analyze the things they own and figure out whether they want to own those things for a long time. That is an important skill, and it's not well taught.
Yeah, this is Chamath 2.0 because he was really obnoxious. He used to be diamond hands, Chamath. All right, the next question. You were so.
People change, goddammit.
Whatever. Okay. Next up, Luis Sanchez, Booth Alumni 19. He will be asking a question. Luis.
Hi, Chamath. You talk about the end of globalization and the establishment of regional blocs. So my question is, what happens to multinational corporations? Do they get to choose a country? Do they get split? What's your vision for the future?
It's an excellent question. There is one way. So there's only a one-way street for these multinationals, which is that their asset values in time will erode, And I think the way that it will happen is largely through carbon tariffs. Now, you probably studied carbon taxation, but I want to explain the difference. A carbon tax would say, oh, listen, you burned X many tons of hydrocarbons to create this good, go buy an offset, an equal, and but a tariff is actually what, for example, the Europeans will do. And I suspect what US and China, when they have a trade war, they're never going to go to war. Like, there's no risk of nuclear war, but there is a very high risk of economic war. And I think it'll be in the form of tariffs, which says, if a good or service enters my country. So imagine the best way for America to dismantle Chinese manufacturing supremacy. I need to know with 100% surety, for example, Apple, that this iPhone case, how much petroleum was used to make this? And I'm going to charge you a tariff based on that assumption. And all of a sudden, large companies will basically get roiled. The capital markets will go nuts. So I suspect that multinational corporations over time have future cash flows impaired. And so instead, you'll have these sort of like regional conglomerates. Now, the pendulum at some point, Luis, may switch back to globalization. And over time, maybe there's another 50-year cycle where private equity folks and all these other guys dominate the world and consolidate these things and create MNCs again, multinational corporations again. But I don't think that's for another 30 or 40 years.
Okay, great. Next question is AJ, the student who introduced this event. AJ is a fourth year. Come on, AJ.
Hi, Chamath. You once voiced your support for Brad Gerstner's proposal for a $2,000 mobile savings account for every American child. I'm just curious if you could please talk more about your support for this potential program and why widespread equity participation is important for American society.
Yeah, I mean, I kind of said it.
Explain that. Explain what it is.
Yeah, AJ, do you want to explain it? Because I'm not sure I know Brad's proposal other than the headline, which sounded great.
Yeah, so I mean, what Brad is proposing, and obviously based on Twitter, is $2,000 mobile investment. So for example, $2,000 goes into a Robinhood account for every American child. That gets locked up for a period of time, whether it be 18, 21, or until retirement, and then they sort of feel like they're part of. They buy into the equity markets. They're part of the capital owning class, and I believe it was on the Invest Like the Best podcast when you mentioned sort of making sure people feel like they're part of equities.
Yeah, I think the high level idea there makes sense, which is like when a kid gets born, the U.S. government could put $2,000 into a savings account and just let it compound. The markets return 8% a year, so when that person is 65, you'll have hundreds of thousands of dollars. That's great. I do think that that's different from financial inclusion because the reality is that that's not enough. So it's a good start. It's to get people to cross that chasm between labor and capital, from being a worker to being an owner, and teaching people how you can be both, and that ownership is not reserved for the 0.001% of society. That's a good thing. But we need to do more. Most people still make most of their wealth in America through home ownership. Well, that's much harder than it used to be because of housing affordability. That needs to change. To your point, most people don't understand the financial literacy skills to know how to underwrite something for 3 months versus 3 years versus 30 years. And that's not, AJ, I'm not asking you to sell out UChicago. I don't think that that's taught anywhere. And so, these are skills that are hard fought. I found not many particularly good resources, and I had to keep playing the game over and over, if you will, to learn the rules. So we need to do that as well, because if people can earn more, like if you look at income distribution in terms of 20% chunks, the bottom 60% spend beyond their income, and that supports the credit card and credit economy in America. In the 80th, the 60 to 80th percentile, they typically can save 3 or 4%. And in the top 20%, they save 13% of their income. Mm-hmm. So you only have one cohort of people that saves, everybody else spends.
Yep.
So if you think that, earnings are going to go up 30 or 40% over the next 5 to 10 years, how do we teach people beyond basic goods and services how to save and how to invest? I have no idea. But what's going to happen is, if we don't do something, there'll be more motorboats, more RVs, more F-150 trucks sold, and it will do nobody a lick of good.
Okay, good answer. I'm going to read this one. It's from Nia Lingaretti from the college. Do you think content moderation on social media platforms could affect future trades on Wall Street bets? Do you feel like there's going to be more content moderation?
Well, I think that there will be, but I'm not exact. I don't understand the question.
Well, where do you imagine it going around content moderation? Because Steve Huffman talked with me about that, about whether there should be, and he said only in places where it's I think it's malignant cooperation, where they're not really cooperating, they're just causing trouble. Do you see more moderation on social media in that regard regarding investments and overall?
I mean, somebody should the SEC should dip their toe into some of these crazy crypto Discord servers that are running. It's
because why? Explain that.
Oh, I mean, there's all kinds of market manipulation going on. All kinds.
Right. And how should that be fixed? Because at one point it's like we should be able to say what we want, and there's all kinds of people hiding in plain sight, essentially.
You need to move away from trust. We need to move to truth.
Meaning, how do you then moderate that? Everyone's clear who
you have to. Why is that issue an issue?
Why is
it today? Because then you can manifest that information through leverage and through all kinds of stuff in ways that could really roil the system.
Mm-hmm.
But if you wanted to buy a lie or perpetuate a lie and couldn't put 10, 20, 30 times the leverage on, you and your buddies are just sitting there, with only the capital you have, it's not enough to move markets. And the reason why markets react is because of how levered it is.
Mm-hmm.
And it's because of how inefficient this last mile of information is around settlement.
Right.
And if you eliminated those, and you can do that with law and with modern technology, I don't think this is an issue. People could say whatever they wanted.
Okay. All right. One more question from Lena, and then I have my final question. I'm going to ask you about your governorship. Lena, are you there? Go ahead.
Yes.
Hi, Lena.
Hi. Hi. Thank you for speaking with us today. So my question, I'm a second year in the college and I'm studying human rights, data science, public policy. So you talked about this leveling of the playing field a lot. But the thing is that people have been socialized and kind of impacted by these historic inequities. So what is your perspective on how to build this symmetry while considering these historic inequities and inequity of like access to information that you kind of talked about? And then this is kind of tangential, but like, is the term reparations a consideration that you've thought of? And like, how does that fit in to this symmetry of information?
I've thought about it and it doesn't. Again, if I started with that premise, it would pull me into a surface area where I have no edge. So, this is just a person speaking. What are my advantages? I've been pretty decent at seeing around a corner, organizing people, and building products. And all that, to be completely honest, is entirely focused on, the future with very little consideration of the past, except for what is the state of today that we can change. So I'll give you a different example that's very sensitive to me. I have 17 aunts and uncles. 11 of them have diabetes. My father died of diabetes. I expressed the gene for it. It's riddled in my family. It's riddled in many South Asians. It's riddled in people of color. I think that's a very asymmetric condition because we don't get access to the food we needed. I grew up, at one point when I moved to Canada, boom, I ballooned and I became really overweight because we were poor and we ate shitty food. Honestly, that's simple and very basic diet. Now, I could sit here and I could have two paths, which is I could, try to figure out some historic sugar tax and, try to fix that. Or I could just say, well, knowing what I know today, I think there are technologies that I could be a part of helping to build that will allow people, especially those of color or people who don't have access to means, to prevent heart disease and to manage their diabetes using their phone. And that'll go a long way. So I tend to take that more pragmatic view. I think it's easier for me to organize resources that way. And at the scale in which I'm trying to do it, it allows me to generate the most momentum quickly. And the issues of sort of looking at the past and history, I have found to be an inefficient allocation of my time and capital because it just becomes a quagmire and a moral and philosophical debate. And then, I can't get engineers to work on products.
Lena, any reaction?
I think that that's interesting to like put it as like a moral debate. I think that there's a lot of, I think that that is true, right? But at the same time, this is something that I've been thinking about, and Karen knows, but I have a podcast called Kind of Sort of Brown, and the episode that we're working on is coding hate. So how the biases of people who are creating these algorithms, who are making these systems, how that also influences, you know, the creation of like these equitable systems. So I guess, does that ever come as a factor to you when
So
you're
that's
considering it? Because that is in history.
So I think that what you're saying is true for things of subjective judgment, but the things that I'm talking about are not subjective. They're not based on trust, they're based on truth. When you go to Google, you do have to have some small amount of trust that when you write something, that search result matters. What I'm talking about is, you know, there's a sensor that reads your blood sugar and over a longitudinal period of time can help you stay in band so that your H1C doesn't go up and all of a sudden, you know, you're pre-diabetic. And that's just, there's no bias there. The only bias is if you can't control it. Now, there are other issues after that, which is like, you know, that's an example, but like, you know, so I think that what I'm talking about are systems of science and biology where things reduce to facts pretty quickly. But again, that's a decision that I've made to focus on those problems because for me, they're tractable.
Right. Okay, Lena, thank you so much. I'm going to ask you a final question. Although then, you know, things do rear their ugly head that don't make any sense, like what's happening in Arkansas right now around not treating gay people, which doesn't make any economic sense or any other sense, but they're doing it anyway. So let me ask you a last question. So speaking of political office, are you running or what's going on? Are you just trying to drive Gavin Newsom crazy?
I mean, that was mission accomplished.
Okay.
Gavin Newsom is like an extremely good example of something that's very pernicious and gross in American society, which is
okay, pernicious and gross. All right, got it. Okay.
He got that job because he stood in line longer than anybody else, and he was willing to be an ineffective political hack, who, frankly, when he got the job, he was in over his head. And he wasn't intellectually capable, neither himself nor his team, of managing through it intelligently. And it speaks to where I think we started as a society in America in the 1700s, which is the best and brightest people of society. Now, at the time, it was only men, but there were, you know, we could do this better today. But the best and brightest of society stepped in to do the job for a small period of time and then went back to their life. And they weren't looking to get remunerated by doing the job. They felt it was a service. And Gavin is the exact opposite of that. It's waiting in line, you know, paying your dues, you know, fighting the political fights, you know, not thinking for yourself, but thinking on behalf of a body politic. And when you have a moment like a pandemic, you realize that that's not enough. You can't do that anymore. There was a recent poll that came out that showed that 40% of Americans, 40%, are firm centrists. That's a plurality that will get somebody elected who actually just wants to be a normal, sane person who tells the truth, tries their best, and isn't a hack. And so
well, that's what Trump would think of himself, wouldn't he?
Well, I think that Donald Trump, as offensive as he was on so many things, on other things, he was a truth teller, which is to that dynamic here, which is he was a canary in a coal mine around this idea that people don't want it. Now, that was about the extreme right, but I think the equivalent could be said for the extreme left. Moderation and centrism, I think, is what we want from government, because they should write sensible incentives and then get out of the way. So, you know, when I floated that trial balloon, it was out of immense frustration. This state gave me everything. I feel very loyal to it. And then to see it just...
And you don't want to do one of them flouncing out of the state and leaving, like, I'm so angry.
The number of people that just run away, number one. The infrastructure that's crippled, the school system and how it's run, the virtue signaling that governs how decision-making in California works. They throw around this word, which is like such a loaded word. Honestly, I'm telling all of you, if you listen anything from what I'm saying, if you hear the word inequity, you should run away. Because the only word that matters is equality and inequality. Inequity is what people use to change laws to hold on to power. Both sides. And when I saw that word being used over and over, why can't we have more vaccines? Inequity. Why can't this happen? Inequity, 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 inequity. Why are you going to shut down a magnet school for smart kids? Inequity. Why are you not getting the teachers back to school? Oh, because we needed to actually change the names of the schools. Inequity. And I thought, what is going on in this state? And if this happens in the 5th largest economy in the world, what will happen to the rest of the country? And then if we're all of a sudden supposed to get our act together and compete against this trading bloc and that trading bloc. So I wanted to test. I wanted to see, do people care about centrism? I borrowed ideas from both the left and the right. And it was incredible. The most important thing, which I was looking for, I saw, Kara, which is the betting markets opened in the UK immediately when I announced. And you know what happened? You know who was even money? I was. And you know who was negative EV? Gavin Newsom was. Now, I stepped aside because I have no intention of running, but I wanted to prove centrism because I'm hopeful that we will field a candidate, and I feel pretty good about this.
Who is that?
Kara, who will be compelling, who will be centrist, who will be normal.
I am not running, Chamath. I refuse, but go ahead.
And will never use the word inequity to try to garner power, who will not try to do this to curate, some kind of life after politics, who would step in, who would do the job, and then who would step out.
So who is it?
I cannot.
But it's not you.
It's not me, but I cannot say.
All right. Okay, I'll get it out of you. All right, Chamath, thank you so much. I really appreciate it. I really always enjoy talking to you. You cause quite a... You always cause something.
I've known you for 20 years.
More than 20 years. I think the other one was legislate. What did you say? Legislate us? No, what was the thing you just at the beginning?
Which?
The legislate us, the thing. Legislate challenge or something like that. But I agree. We'll see what happens with Jeff Bezos today. We'll see what happens if it doesn't. But I look forward to your candidate in California for when I return there, because I really like the state to work, if you don't mind. All right. Thank you so much. And thank you, everybody. I appreciate it. Chamath, thank you for taking so much time. And for the students, they're wonderful students. There were tons more questions, and I'm just going to send them. I'll have them collect them and send them to you. So just
good luck. Good luck. Thanks for organizing this.